In today's fast-paced world, banking is no longer just about visiting a local branch. Digital-only banks, also called neobanks, operate entirely online. They offer services like account opening, deposits, transfers, bill payments, and customer support through apps or websites. Popular examples include Chime, N26, and Revolut. These banks appeal to tech-savvy individuals who prefer convenience and speed over traditional face-to-face banking. Many also provide features like instant spending notifications, automatic savings tools, and budgeting insights that help customers manage their money more efficiently. Traditional banks, on the other hand, are the ones we've known for decades. They have physical branches, ATMs, and a full range of financial services, including loans, mortgages, credit cards, and investment advice. Think of names like Chase, Wells Fargo, or Bank of America. Traditional banks rely on personal relationships and in-person services, which can be reassuring for complex issues or financial advice. They also offer options like scheduled meetings with financial advisors and the ability to handle multiple transactions in a single visit, which can be convenient for those with more complex financial needs. When it comes to accessibility, digital-only banks have an edge. You can open an account in minutes, transfer money instantly, and monitor your balance anytime. Traditional banks also have apps, though sometimes they are less user-friendly or slower to process certain transactions. If you prefer visiting a branch, discussing issues face-to-face, or simply having a human touch in your banking experience, traditional banks remain unmatched. One of the biggest advantages of digital-only banks is lower costs. Many have zero monthly fees, no minimum balance requirements, and higher interest rates on savings accounts. Traditional banks often charge fees and require minimum balances, though they may offer more robust programs for wealth management or long-term investments. For cost-conscious customers, the savings offered by digital banks can be significant over time. Security is another key factor. Traditional banks are heavily regulated and have insured deposits, giving customers a strong sense of protection. Digital-only banks are also regulated in most regions, but protections can vary depending on the bank and country. Traditional banks provide faster in-person support, while digital banks rely mostly on chat or email. Still, most digital banks invest heavily in cybersecurity and use advanced encryption to keep accounts safe, making them generally secure for day-to-day banking. Customer support differs as well. Traditional banks excel at face-to-face assistance for loans, fraud alerts, or financial advice. Digital banks offer 24/7 chat support, which is convenient but sometimes limited. For those comfortable with tech, digital support is usually enough, but for people who value personal guidance or reassurance during complex transactions, traditional banks feel safer. Digital-only banks often lead in innovation. They provide budgeting tools, instant notifications, fee-free international transfers, and AI-powered financial insights. Some even integrate crypto wallets or investment platforms into the app. Traditional banks are catching up, but innovation tends to be slower due to older systems and stricter regulations. For tech enthusiasts who want the latest tools and features, digital banks can make managing finances feel simpler and smarter. For frequent travelers, digital banks are especially convenient. They often offer free international transfers, minimal currency conversion fees, and virtual cards that work globally. Traditional banks have global reach too, but international fees and slower processing can be a hassle. For anyone who travels often or shops online internationally, digital banks save both time and money. When it comes to loans, mortgages, and complex investment products, traditional banks usually have the advantage. They provide in-depth advice and offer a wider range of products. Digital banks are improving but often focus on basic loans or simple investment platforms. For long-term financial planning, major purchases, or personalized investment guidance, traditional banks remain the safer choice. Digital-only banks are ideal for people who prioritize convenience, low fees, and innovative tools. They suit those comfortable managing finances online, wanting instant access to accounts, and minimizing banking costs. Traditional banks are better for individuals who value face-to-face interactions, need complex financial services, or want the reassurance of long-standing institutions. If you found this video helpful, don't forget to subscribe to the channel for more insights on personal finance, smart banking choices, and ways to optimize your money in the digital era.